Hello and welcome. Today, we're diving into something really fascinating in the world of decentralized finance. We're looking at a liquidity pool that's designed to generate value in a pretty unique way by turning pretty much all trading activity into growth. But first, let me ask you a question that might kind of break your brain for a second. How can an asset's value actually go up from people buying and from people selling? I mean, that doesn't sound right, does it? It feels like it shouldn't be possible. Well, let's unravel how one system is actually designed to do exactly that. The secret, it turns out, is all in the mechanics of a very specific liquidity pool, the one for GNIM and USDC. Now, GNIM is the native token for the GNIM Impact ecosystem, and USDC, as you probably know, is just a stablecoin that's pegged to the good old US dollar. So by digging into how this particular pool is set up, we can see how it's engineered to grow from activity no matter which way the market's moving. Okay, so let's get right into that growth engine. The best way to picture it is like a two-way street, where the traffic, whether it's coming or going, actually helps build and pave the road it's driving on. Every single transaction here, buy or sell, plays a really crucial role. So here's how that actually breaks down. On one side, when people buy GNM, they're throwing USDC into the pool. This, of course, pushes the price of GNM up. Pretty standard stuff. But here's the cool part. When they sell. Now, you'd think that's bad, right? And yeah, the price might dip a bit, but every single one of those trades generates fees. And guess who gets those fees? The liquidity providers. So you see, value gets created both ways. Buying drives the price up, and selling generates direct income for the pool. So you're probably wondering, okay, where does all this buy and sell action come from? Well, it's not just random. It's driven by something the source material calls the Trader Sensei flywheel, which is basically a fancy name for a system that's designed to be a self-powering cycle of activity. And this is how that cycle works. It all kicks off with users putting their GNIM to work on the Trader Sensei platform for things like staking and lending. That platform usage creates this constant buy and sell pressure on GNIM. All that action then drives price movement in the pool, and here's the kicker, it generates those trading fees for the people providing the liquidity. It's a perfect feedback loop where the platform's usefulness literally fuels the pool's growth. Of course, anytime something promises growth like this, we've got to talk about the flip side of that coin, safety and risk. You can't have one without the other. So it's absolutely essential we take a balanced, clear-eyed look at what the source material lays out here. The biggest risk they talk about is something called impermanent loss. This is the boogeyman for all liquidity providers. It happens when the price of GNIM makes a huge move compared to the stable USDC. See, the pool automatically rebalances your funds, and in doing so, you could end up with a lower total value than if you just held on to your GNIM and USDC separately. It's basically the price you pay for providing liquidity when things get really volatile, and it is the key risk to understand. So let's lay it all out. On the safety side of things, remember, you're not just lending to a single person. Your assets are in a giant pool, earning from thousands of different trades, which spreads the risk out. Plus, half of what you're holding is in USDC, which is designed to be stable. But on the risk side, as we just covered, you have that impermanent loss from big price swings. And, like any system based on markets, the returns really do depend on how much trading is actually happening. But here's the core counterargument to all that risk. The source really hammers this point home. Even with price swings, fees keep flowing in. The whole idea is that as long as people are trading, and it doesn't matter if they're buying or selling, that sweet, sweet passive income from fees just keeps rolling in. The hope is that if trading volume is high enough, those fees can help offset or maybe even beat the risks from the price moving around. Okay, let's zoom out for a second, away from the nitty-gritty numbers. The source material frames this whole thing as not just a financial move, but more like a participatory act. It's about becoming a key part of something much bigger by literally fueling an entire ecosystem. So what does that actually look like in practice? Well, by providing liquidity, you are the one enabling the whole GNIM Impact and Trader Sensei platform to even work. You're the reason traders can get in and out of their GNIM positions without a hitch. And for doing that, you get a cut of every single one of those trades. So as more people use the platform, the potential for your fees and the value of GNIM itself just keeps growing. And this all brings us to the final, really powerful idea that the source presents. It wraps it all up by saying that providing liquidity is more than an investment, it's a partnership in building the future of decentralized impact finance. This really reframes the whole thing, doesn't it? It's not just a transaction anymore, it's a team effort.
So, we'll leave you with this final thought to chew on. We just broke down one very specific system today, but the question at its heart applies to everything. For any investment you ever consider, how do you personally weigh that exciting promise of being a partner in some grand vision against the cold, hard reality of financial risk? It's the essential tightrope walk every single investor has to figure out. Thanks for tuning in.